Okay, MOMO's back in the news. MOMO's the ticker, and MOMO Inc. is the company. We've talked about this a few times, actually. We had a buy out on it on January 16th. We reiterated on January 25th, and now we're saying it again after the earnings. So we've actually done quite well since the January 16th recommendation. It's up 31%, which is a great move. Not much has really changed. I mean, the earnings were nice, but it's really just confirmation of what we were already saying. So, I just want to give you an update there. Let's do this as a quick one. Operating income was up 12% year over year. Revenue of $559 million versus $386 million the same quarter the previous year. And it also beat estimates, which was for $532 million. So nice little beat on both the top and the bottom line. In our models, we're showing good return on invested capital. Let's flip over and take a quick look. This is the exact same model that it was in the previous video. We have not changed a thing. This quarter that just came out today is not in our data yet. Well, it'll be interesting to see what it looks like. But I know from experience when I read these, it'll be slightly better. Return might stay about the same, but I think there'll be more capital, and I think overall valuation will go up. Couple of cautionary notes on this. Even though we've got it right, we're reiterating. This is a wild stock. Have a closer look at the chart. I think I'll scroll up for the viewers here and get a little bit better view. Oops, I scrolled right past it. It always has a little bit of trouble with these graphics when we run too many things. But there's the longer term chart, and this is a 2-year chart right beside it on the right. And that 2-year chart's pretty wild. The longer term chart is actually even crazier. So it's going to be crazy. It's going to be volatile. But with the fundamentals this strong, when I say strong, look at that return on invested capital improving to 29%. Valuation, I don't even have to touch it. But again, this is China. There's risk, there's execution risk, there's accounting risk. We don't always trust the numbers. There's just trading risk. People have wildly different views on these things, and there's a lot of risk here, but there's a lot of reward. And when in the long run, fundamentals usually win out. So far, the fundamentals have proven out to be very good. And we want to reiterate after the quarter that we're still supporters of MOMO. I want to make another note too. We also had a report last week on March 6th on YY, which is a very similar company to MOMO. YY is more about streaming video though, but there's both a social aspect on both of these. So YY, when I say streaming, is not like a Netflix. It's more streaming of your own personal videos and things like that. So and MOMO would have some of that as well. Both really interesting stocks. Look, high risk, high returns. So far, we've done it. We've got it right. There'll probably be a day in here when they'll release a quarter, and we'll all be disappointed. But that's the game, and that's the reality of this stock. So have a bit of fun with it. Don't take a big position. Be more ready to trade than normal compared to some of our other recommendations. Okay, so there's MOMO, and YY is another good option.